All right, today we're going to break down a philosophy that has, no joke, helped millions of people build real long-term wealth, the Boglehead method. We're going to distill the wisdom from the Boglehead's Guide to Investing into a clear path that you can literally start walking down today. So, let's dive in. Let's start with just a number, 95%. What do you think that represents? I'll tell you, it's not a success rate. In fact, it's pretty much the exact opposite. That's right. It's a statistic that has stayed surprisingly consistent for a long time. A whopping 95% of people hit retirement age and, well, they aren't financially independent. It's a huge problem. But here's the good news. It's a solvable one. So where does a problem this big even come from? Well, more often than not, the answer is hiding in plain sight. It's our financial lifestyle. The day-to-day choices we make with the money we earn. The book really breaks this down into two ways of thinking. On one side, you've got the borrowers and the consumers. The borrowers are living on credit, a lifestyle the book calls a house of cards. The consumers live paycheck to paycheck, always asking, can I afford the monthly payments? For both of them, it's all about earning just so they can spend. But on the other side, you have the keepers. And their focus is completely different. They have a net worth mentality. They pay themselves first, and their goal is to accumulate wealth, not just burn through their income. And that, right there, is the solution. It's about adopting that keeper's mindset. It's a huge shift from worrying about how much you make to focusing on how much you actually keep. That's the real path to financial freedom. So here's the key takeaway. The true measure of your wealth isn't your salary. It's your net worth. It's a super simple calculation. Just what you own minus what you owe. That number, not your paycheck, is your real financial report card. But look, before you can really start investing, the Bogleheads are very clear that you need a solid foundation. It all starts with making that mental shift to focusing on your net worth. Then you have to attack high-interest debt. I mean, think about it. Paying off a credit card with an 18% interest rate is like getting a guaranteed tax-free 18% return on your money. You just can't beat that. And finally, you build a financial firewall, an emergency fund with 3 to 6 months of living expenses tucked away. Okay, so once that foundation is in place, you get to unlock the single most powerful force in finance. Albert Einstein supposedly called it the greatest mathematical discovery ever, compound interest. This, my friends, is where the real magic happens. And here's a fantastic little mental shortcut to really grasp this power. It's called the Rule of 72. All you do is divide 72 by your expected annual return, and that tells you roughly how many years it'll take for your money to double. So, at an 8% return, your money doubles in about 9 years. If you get 9%, it only takes 8 years. It's a simple little rule that shows you the incredible power of just letting time do its thing. Now look at this number, over $1.2 million. Your first thought might be, wow, you'd need a huge salary for that. But the story behind this number is what makes the Boglehead method truly inspiring. And this just illustrates the point perfectly. The book shares this amazing letter that Jack Bogle, the founder of Vanguard, received from an investor who had built up this fortune. But here's the most incredible part. That person never earned more than $25,000 in a single year. It wasn't about a high income at all. It was about consistently saving and investing over a long, long time. Let's break that down even more. I mean, what's $11 a day? For a lot of us, that's a couple of fancy coffees or a lunch out. But by just channeling that small amount into an investment that gets an 8% return, a 25-year-old can become a millionaire by retirement. This isn't about getting lucky. It's about the discipline of small, regular habits. So you've got the right mindset and you understand the power of compounding. What's next? What do you actually invest in? Let's look at the simple toolkit you need, and you'll see it's way less complicated than you probably think. First up, stocks. Just like it says, when you buy a stock, you're buying a tiny piece of a business. You should think of stocks as the engine of your portfolio. They're what provides the long-term growth that's going to beat inflation and build you real wealth. Next up, we have bonds. Now, if stocks are the engine, think of bonds as the brakes, or maybe the shock absorbers. You're basically just lending money to a government or a big corporation, and in return, they pay you interest. Bonds provide stability and income, and they help balance out the ups and downs of the stock market. So how do you easily own thousands of different stocks and bonds? Well, that's where mutual funds come in. They're basically just baskets that pull money from tons of investors to buy everything all at once. This gives you instant diversification, and specifically, Bogleheads are huge fans of low-cost index funds, a kind of mutual fund that just aims to match the market's performance, not beat it, which keeps the fees you pay incredibly low. This quote from Warren Buffett just perfectly captures the Boglehead spirit. This whole thing isn't about frantic trading or chasing hot tips. It's about buying quality stuff with a plan to hold it for the long haul and just tuning out all the daily noise from the market. And that brings us to the final and maybe the most important question. The Bogleheads Guide suggests saving a minimum of 20 cents of every single dollar you earn. So as you finish this explainer, the big takeaway is a question for you. When you look at your next dollar, where can you find the first 20 cents to pay your future self? Because the answer to that question is exactly where the path to wealth begins.